Greetings, members, one and all of the Salivation Nation. What happens after the gold price breaks $1,800? Let's explore. Yes, gold prices do have some room to push here, according to this article from Kitco News, above $1,800 an ounce. But by the time you watch this video, they very well may already be there. But that's in the near term. But investors should use some caution when investing at these levels, according to one international bank. In a report published last week, Joni Teves, a precious metal strategist at UBS, said that the pullback in gold after pushing to its highest level since 2011 was a natural function of the market, as investor sentiment has improved with better than expected economic data. However, TV's added that economists at UBS don't see any new scenario for a sharp global economic recovery. This environment will remain supportive for gold, she added, although I will disagree somewhat with that. We've seen some better than expected job numbers, better than expected consumer spending, among other things there. But there's a mixed bag. We have obviously other aspects of the economy that are quite troubling. We still have the coronavirus, which we're dealing with, which have made markets nervous out there. And we still have very high unemployment. U.S. real rates have fallen deeper into negative territory. U.S. 5 and 10-year tips have declined as much as 40-plus BP since the highs in early June. With infection rates flaring up in the U.S., the implication on growth and corresponding policy response are reinforcing the argument to add gold to investor portfolios as a hedge and diversifier, said TV's. UBS's U.S. economists continue to expect short-end yield curve control would be introduced in September, as well as clarity on asset purchases. However, the UBS seeing gold's push above $1,800 an ounce is only a matter of time. TV said that the real question is what happens next. The comments come as gold prices continue to flirt within striking distance of the long-term resistance level. August gold futures last traded at $1,793.50 an ounce as of the recording of this video, up 0.20% of the day. The futures did get up over $1,800 an ounce, as we reported previously, but it's going to take a sustained level here to break that psychological level for sure. Does the market currently have the energy to extend the move even further towards all-time highs, or will investors who have been long gold for some time take the opportunity to take some profits off the table? We think the risk-reward at this point probably favors the latter, she said. In the near term, TV said that the risk of financial markets is how much bad news is already priced in. Yeah, there's a lot of psychology to it as well, and a lot of people are concerned out there, and so we may not see a whole lot of activity here, and we may see some pullbacks as we get some good news coming in. But we've seen some good news, and gold has held its own for the most part. Real rates are already around the lowest levels in 7 years. This raises the risk that any bounce from recent lows takes a bit of shine off of gold, triggering some unwinding, at least in the near term, she said. Despite any short-term volatility, TV's said that she remains bullish on gold in the long term. She added that investors will see any drop in gold prices as a buying opportunity. I do tend to agree with that. Gold is that ultimate insurance. It's a Tier 1 asset, as designated as such from the Bank of International Settlement. And I believe that it is here to stay. And I believe that the days of $13, $14, $1,200 gold are behind us now. I remember a time when we were talking about people saying it's going to go below 1,000, but it never got there for sure. $1,100 was, tell you what, it'd be a dream to pay $1,100 for gold again. The article closes, as long as real yields remain negative, it's deemed sufficient to warrant an allocation to gold in this environment. So we'll see those yield curves and what have you, but nonetheless, I think the other factors remain, for the long term. One thing I will add here is taking a look at the price of gold, really since 1980 here, we're looking at a very short amount of time when, adjusted for inflation, gold reached up to this level. In fact, here, adjusted for inflation, according to macro trends, it was up over $2,000 an ounce. And in 2011, it had reached from, since about October, May, adjusted for inflation, was over 2,000 an ounce then as well, too. From about throughout until it really didn't start dropping until February of 2013. So we had quite a span here that had kept up fairly high. As we approach these levels now again here, now we're making that climb back upwards. How long can it be sustained, and what would be the catalyst to bring it down a considerable amount here? It's at from September 2012 down to May of 2013. Took quite a hit there for sure. So we'll see how it all plays out. That's the thing. You never know what could be the catalyst to bring it back down once it's back up again. These markets are what they are, and there's really no rules that I can think of to take into account when you look at this types of thing. But my guess is looking throughout history, gold has really performed very well, and I think that considering what we've seen since the last recession, we've not seen it below a certain below $1,000. In fact, it's barely gotten below $1,200, only really a few times there. And so I believe that is sort of the new ceiling. Whereas before all of this, it got way down and got to, and adjusted for inflation, under $400 an ounce. And so when you take that into account, gold is performing very, very well. And I believe this history of this action here will give us some indication, some clue as to what will happen after gold hits $1,800 an ounce. But history is just an indicator. It does not necessarily mean that the performance of the metal and the markets will be any particular situation after that price action hits. But in the long term, we are bullish on gold for sure, and I am too. That's why I've been accumulating more of it, because it is the more stable of the precious metals out there, and you can pack a lot of value in a small package. One thing that will not change is spending will continue to increase, as we have seen in recent months, to try to get out of this pandemic. They're going to inject liquidity everywhere and anywhere. To talk about another round of stimulus or relief. And also, we're going to increase our debt on account of that spending. And they will tax. More than likely, some taxes are going to go up because of this. It's not going to do any good, because we're spending ourselves way beyond what we could ever tax anybody at this point. And even as such, people they can only earn so much. Something's got to give somewhere. But make no mistake, gold and silver, those metals, you can only produce so much of them per year, and they are what they are, as they always have been, what they have always been. And gold especially as being the ultimate form of insurance, as a stabilizer against these economic hardships that we're seeing out there. That's why we hold it. And I would encourage you to hold on to what you've got, even if you can't afford to get any more or get the amount that you'd like to. I believe it's a good way to protect yourselves against economic instability. We'll see where things go from here on out. The metals are what they are, and they do what they do. But I believe that what happens after gold hits $1,800 an ounce, well, I think that gives us into a whole nother realm of a possibility. It depends how long it can stay up that high. But if it does maintain that level for long enough, I believe we have seen a new floor, a new psychological floor of $1,800 an ounce. And you will be paying more than $2,000 an ounce probably for a gold coin or bar. Well, maybe you might be able to find some for relatively cheaper if these supply chains close up, but it still is a pretty high premium on gold, and especially silver right now. But regardless, that's where things lie with the metals. Let me know what your thoughts are in the comment section below, and I want to encourage you to share this video to among any other social media platforms you have out there, and encourage you to please rate, comment, and subscribe.